All right, everybody, we're welcome to a special episode of Profit Acceleration Secrets, where we are conducting a profit acceleration coaching session. And I am honored to have my guest, Mr. Ron Harris, online with us today. Ron, how are you doing today, sir?
I'm doing really good, man. How about yourself?
Doing well, man. It's end of day here on the East Coast, but man, I feel like the day is just starting. This is like when my most productive self kind of kicks in. So
Oh,
honored to,
nice.
honored to have you on the call with us today.
Yeah, we're a little earlier than that, of course, West Coast. So, yeah, cool.
All right, fantastic. Well, Ron, man, before we dive into our conversation, I would love if you could just take a moment to introduce you and to just give us an overview of your business.
All right. So, of course, I'm Ron Harris. I'm on the West Coast. I'm in Santa Monica. Um, I'm kind of a serial entrepreneur. I've been in business pretty much all of my life. I owned a marketing company before I started this. When I worked with pretty large corporations, from TV stations, celebrities, and on and on and on. I went through a divorce back in maybe 2006, 2007. From there, I worked kind of here and there for different organizations, mostly corporations, as a marketing director. And then in 2010, I went out on my own again and started the this insurance company, which I'm doing right now, which is a financial company, really what it is. And so what we do, because of my background, I guess because of the research and the solutions that we did in the marketing field, we researched the financial industry, and we kind of really came up with a different concept of how we operate. So we are using or selling life insurance, but really our go-to-market strategy is helping people pay off their debt, right? So
Mm.
maybe a mortgage. We can help them pay off a mortgage in 5 to 7 years. We can show them how to pay off their debt, their student loan debt. But what's really big and what the life insurance does for it is it allows them to make money on the money that they use to pay off their debt, right? So they turn their debt and their liabilities into income and wealth.
Okay, interesting.
Yeah.
Take us a little deeper. And I guess I am curious to ask now, sounds like you had a really exceptional background in marketing, and now you made a huge pivot into the world of insurance and financial literacy. I'm intrigued by that pivot, but definitely take us deeper. Tell us more, maybe about a mix of the products and services that you all are offering.
Yeah, so it's kind of funny. My career in insurance world kind of started in healthcare in the beginning. I kind of learned my way around by doing that, working for one of the large companies, and especially when Obamacare was very big back in 2008, 2009, when it first started. And I then started to more and more apply what I had learned when I had my company to what we're doing. So some of the research that we did in the beginning, and we've always been different, as you can tell. Even though we're a financial company, getting people out of debt was a big thing for us because we realized that it was debt that was holding people back. Right? You can't you can't earn a retirement, or you can't get rich or build wealth if you have debt and you're sending the money to the banks, and that's who's taking it. And so we've all been fooled into doing things one way, the way the banks are telling us to do things. And what we found is that there are different paths that you can take to build your finances, to build wealth, to retire with dignity. And a lot of it has to do with what the banks are actually doing. We're actually duplicating what the banks are doing. So for instance, where we are now, and still offering the technology, which is kind of the catalyst for what we do in the life insurance world. But the technology is really smart. It shows people how to do things differently than they've done in the past, different ways to pay off their debt.
Mhm.
And it uses what we call an offset account. So in the beginning, the offset account was a HELOC, right, primarily, and the banks got wise to that, and they know that people were using the HELOCs to pay off their mortgage debt and their debt, and they kind of made it more difficult to get HELOCs. So then from there we moved to savings accounts, and so in other words, everybody has one, and they could use the savings account as an offset account and pay off their debt. So when I am doing a kind of a background, or I'm looking at people's numbers and I'm mapping their payoff, I'm using a savings account as an offset account. With the life insurance policy, because of the IRS codes that changed in 2020, we're able to substitute the life insurance policy for the savings account in the technology. This allows people to still pay off their debt. The life insurance is totally different from what everybody else is doing out there. And I see lots of people talking about whole life policies and index universal life policies and on and on and on. But what we do is different because our policy is more like the bank's policy. And by the way, guys, the banks use life insurance, right? It's called BOLI, bank owned life insurance. And the banks own it. They buy it just like normal people. And we're able to duplicate in what we do the same way as the bank is using the policy. So this policy is special, it's different, not the same as you would get from a normal life insurance agent. It has no surrender charges, right? And when you see people online talking about index universal life, they're talking about surrender charges. This policy has none of those. And they also talk about caps, right? If you have an index universal life policy, usually you're capped at maybe 12 points at the highest. So which means if the S&P 500, which it's indexing, goes up 45 points, you're capped at 12. This policy has no caps, right? So we're changing the way people think about index universal life policies, if you understand that.
All right. Well, I was going to say, man, you keep talking like that. I feel like all these other insurance companies are going to put a hit out for you, man.
You know,
It sounds very, very disruptive, and I love it. So good stuff.
yes, it definitely is. It's funny that you said that because, you know, I feel that when I talk to an insurance agent, and a lot of times it's the insurance agents that are the hardest people to understand what we do, right? Because they're used to people being able to borrow against a life insurance policy or the death benefit. In this case, you're not borrowing against the death benefit. You're not borrowing against the death or the face value. You're actually borrowing against the liabilities, the debt that you use, that you overfunded the policy with, right? And so when I'm talking to an insurance agent and they ask me about what we're doing, and I explain it to them, and if that insurance agent, after hearing what I have to say about what we do, and they go back to selling the normal life insurance policies that they're selling, they're
Yeah.
really not a great fiduciary, right? Because they're knowingly now offering their client a sub kind of a policy that's lesser than the
Yeah.
one that they actually are offering. Yeah.
All right, good stuff. Well, Ron, the goal of today is really just to learn more about your business, but ultimately help you uncover new opportunities for business growth. So teach us this. If we talk about a mix of strategies today that you feel will be beneficial for everything that you're trying to build, you choose to implement any mix of what we talk about today. What does the business look like, 6 to 12 months out from now? What are some of the goals that you're putting out there?
Well, that's a great question because when we first started doing this, and by the way, this part of the solution, or part of where we're at right now, is not that old, right? It came out after the 2020 CARES Act and the changes in 772-101A, the IRS codes that Congress changed. So in the beginning, when we first started thinking about this, and there's not that many of us in the country, we thought about advertising. We thought about talking about and building the brand of the company, and building the brand of what we do. But then we realized that really and truthfully, we don't want to become famous in that way because we have the banks to contend with, and we don't want the banks to put a target on our back, because we're taking away their profit, in a lot of cases. But we
Sure.
also realize that as small as we are, because we are a small company, really, we're a drop in the bucket compared, you know, to the banks. And and it's not always the banks or the loans. It's sometimes the mortgage servicing companies that we're dealing with. But I would say what we're looking to do is to really build out our team. our sales force to find more agents. What I see in the future is that at some point everyone's going to do this. Everyone's going to become their own bank, become their only borrower in their own banks. They're going to have personal banks, and I can see that part of the system or the part of what we do growing very much.
All right. So I guess two parts of what I think I heard in there, Ron, but keep me honest. Number one is just advertising slash getting the word out a little bit more, but differently than traditional, kind of traditional paths.
Yeah,
And then the other part is building the workforce. And I'm assuming just from the research that I've started doing on, on your team, your business before our call here, I'm assuming that there's some opportunities to have a very, very unique model. Something within me kind of gave me the feeling of almost like the Uber for financial literacy or insurance. Like, is that an opportunity with what you're building out here?
definitely is an opportunity.
Okay.
We do things differently, as you already have surmised. We're not advertising, and we're not, and really and truthfully, we don't talk about life insurance. Our clients mostly right now come from Facebook, right? So we
Hmm.
advertise on Facebook,
Okay.
and we talk. Our ads are really about people paying their debt down, paying their mortgage off early, paying their student loans off early. So we have an abundance of clients that come to us because, again, we have this. I have this thing when I say, where if you're talking about life insurance, nobody wants to talk about it, right? You have 100 people in the room and you ask them who wants to talk about life insurance, you're going to get very few that do that. But if you ask those same people, who wants to pay off their mortgage early, who wants to get rid of their student loan or pay off their debt early, then you're going to have a lot of people who are interested in that. And for us, our market is endless, right? We have, in the United States, we have trillions of dollars of people, trillions of dollars of debt. People have debt. Debt is a big problem all over the country. So the approach that we're taking, or the opportunity that you, as you're saying, is
Hmm.
huge, right?
Yeah.
Getting people and helping people with their debt.
All right. I love it. So what I do hear in that is that you guys have gotten fairly clear on your ideal clients.
Yes.
Because I mean, of course, your product is insurance, but the pain point that you're targeting is debt and other financial security for that potential client.
Yes. Yeah. Retirement, debt, right? So, for instance, you have a mortgage, and like, for instance, I have clients that I talk to all over the country, and
Mhm.
I have some that are in places, or real estate agents, and some people who are in real estate or are buying properties. I have this one guy who's in Maryland, and this was maybe a couple years ago, and he had maybe 7 or 8 properties. He was living in one of them, but on all the properties, even then, he was paying 6% interest. So even with all the work he's doing, keeping the property full, servicing and doing the maintenance on the property, and taking care of the properties and keeping them up, still most of that money is going to the bank. If you're
Yeah.
paying 6% interest, you're paying more money in interest than you are for the property itself.
So teach me this then. I mean, if you guys are fairly clear on some of the pain points for your customers, especially again if it's dealing with debt and financial literacy, financial security, um, have you all started developing joint venture partnerships with other products and other services that also equate to stable households, stable financial lifestyles?
Yes, yeah, and we're looking at lots of different things that we can do, but definitely, other insurance agencies, because
Mhm.
what we do as far as you know helping people become a better insurance client, right? If they're paying off their debt, they don't have debt, they don't have a mortgage to pay, they have more
Mhm.
money to put away for their life insurance, so they can build better retirements. And so, other insurance agencies are perfect for us. PEOs are perfect for
Yeah.
us as well. Group and life group insurance companies, or business insurance companies, right? So we really consider ourselves a financial wellness company, right? Where we start at the beginning from the financial literacy, like you said, which we have courses online that people can take at their own pace. helping the employee getting out of debt, paying off their car loans and their credit card loans and the student loans and so on and so forth. So our target market would be people who have debtors, definitely mortgage or homeowners or a big part of what we do. So people in real estate are good partners for us as well. Real estate agents, right? If you think about it, you can help
Mhm.
someone buy a home, right? You can get them into that home, and then you can help them pay that home off earlier. And of course, they're back in the market to buy another home sooner than you would imagine they could.
All right, fantastic. Well, Ron, one of the strategies that I do teach to all my business coaching clients is something that I call a market dominating position. Basically, it's how we go about differentiating ourselves from the competition, right?
Mhm.
And one of the easy examples that I always share that I think a lot of people resonate with is Domino's Pizza.
Okay.
So, like back in the day when they said, "Hey, if you want a hot, fresh pizza in 30 minutes or less, or it's free," right? And took them to the next level business wise. So, I guess my question for you, Ron, because again, you're an insurance company, but you're also playing in the financial wellness space. Um, what would you say is your market dominating position? Do you guys have one? Like, how do you truly differentiate yourselves from a lot of competitors? And I'm familiar with groups that kind of play on both sides. We know insurance, we know financial wellness types of companies. So what's your real way to differentiate?
And that's a great, because I've been creating videos, and to kind of explain those differences, because insurance is very big right now, right? You see lots of influencers online. You see people talking about life insurance. You see it everywhere. So one of the things that people talk about, and especially, is using life insurance as a bank, which is would really big for us. But we take it further than the normal life insurance company who's maybe doing infinite banking, or banking on yourself, or family banking, or those kind of things, where they can take a whole life policy, or a index universal life policy, and allow you to bank, right? So in other words, in those kind of policies, you would pay the premium payment, right? What's different about them is those will come with surrender charges, right? So you might be paying the premium payment, and you can pay it for 10 years, 12 years, or 13 years. And after that point, when you've paid and you've gotten past the surrender charge on life insurance policy, you can borrow then against the policy. So you can borrow $50,000 out of the policy. You can go out and buy a home, or or a car, or consumer product, or whatever. And
Mhm.
then you're not paying the bank the interest. You're actually going to pay your life insurance back, because you've borrowed against the surrender charge, or the death benefit. And so instead of paying back the interest that you would pay for the bank, you're banking, and you're paying back the loan to the insurance, your insurance policy, or your death benefit. We don't do that, right? So we really overfund the policy with that person's debt, with their liabilities. And so the collateral is not the death benefit or the life insurance policy, it's actually the debt itself, the money that they use to pay that debt off. And that it will normally be a reduced amount, because the technology will show them how to eliminate up to 75% of the interest on that. So our differentiator is the fact that we're not we're taking infinite banking and family banking to a whole new level. We're actually turning those kind of solutions on their head by what we're doing, right? And now borrowing against the collateral rather than the death benefit is huge, because really and truthfully, you never have to pay the loan back. You're borrowing against yourself. Your debt is the collateral in this situation.
All right. So, Ron, this is me putting on my business coaching hat for you, sir. Um, all of what you just said, I'm sure it sounds good to you as the expert. Now we need to turn that into one, maybe two sentences at most that I think would just absolutely captivate, your target audience person. Again, Domino's Pizza, right?
Sure.
Hey, are you hungry? Well, if you are, we have hot, fresh pizzas that are cheap and we get them to you fast, right?
Yes.
So that if I'm a college student, I might have a little buzz going. I want
Yeah.
something quick and easy and cheap,
Absolutely. And
right?
you know
So,
what? It's funny that you're saying it that way
all
because
right,
we kind of developed that at trade shows, right?
okay,
Because it's hard to get people's attention and how hard to stand out when you're at a booth at a trade show and you're offering insurance, and that's what they see when they look at your booth. But when you can ask somebody, "Do you have a mortgage?" and they say, "Yeah, I got a mortgage. Would you like to pay it off early? Yeah. Would you like to eliminate 75% interest? Yes. How about if we set an appointment and we talk about it?" That's kind of how we approach people. So you're
okay,
exactly right. This is easier to do that way. In fact, all the stuff that I said, today about what we do and how we do it and stuff is really overkill. And especially in the space that we're in, right? You have to keep it simple. You have to be able to engage that person in a couple of seconds, right? Rather than talking about all the difference that you have, because
right,
it will you talk right past them. So
yeah, yeah.
exactly, you're exactly right. A couple of sentences, a couple of things, and then that's what we do is we set the appointment.
Yeah, and if you're open to it, I mean, I have a great resource that I can share, send over to you after our call. But the foundation of creating what I like to call that market dominating position, it is really built on two key thoughts. And the first, and I think you already had it wrapped up with the questions that you said that you guys ask when you're doing trade shows. So there's a problem they have and they don't want. There's a solution they want but they don't have. And so now, if you introduce your business in a way that addresses those two key points, that closes the gap. Hey,
Yeah.
do you have a mortgage? Do you want to get out of debt? Right? Problems they have and they don't want, solutions you want. Well, hey, we should have a conversation. A solution that I want that I don't currently have right now. That can be a game changer. That has been my experience, implementing that with all my clients. But wanted to share that thought,
Yeah,
and
no.
again, I have a great resource to share if it's.
Yeah, I would love to. I would love to. And I would love to work with you. I think that your approach in keeping it simple and having those, that couple of sentences that really catch their attention and bring them in as a client potentially is perfect. Absolutely.
Awesome.
Yeah.
And then you also mentioned building a team too, though, right?
Yep. Definitely recruiting.
All right. So here's your pitch opportunity, man. Why should I come work with CEO Ron Harris and the Financial Literacy Group, man? What's the pitch to bring in talent?
Because the market is huge, right? Everyone with debt. We're not selling life insurance, but you can make the money that you would if you were a life insurance agent without selling life insurance, helping your clients.
All right. So I would say I don't know. Sounds good. It's not a differentiator though, right?
Not a differentiator. Yeah,
So
no.
that same concept, believe it or not, the same concept of a market dominated position that we could use for consumers, we could turn it right back around and use it inwardly for the workforce too.
Yeah, I
Um,
agree. I'd love to talk to you about that and work on that with you. Absolutely.
all right, no, absolutely, because yeah, I mean these will be the things that I think, at least based on what you shared, advertising and building out a team. Man, if I knew that financial literacy group was dedicated to building communities, well, hey, I'm in a community. I care about that, right?
Yep.
If I knew you guys were dedicated to getting groups of people out of debt and out of negative financial circumstances, well, hey, I should work there because I'm almost in debt, right? I'm looking for the next opportunity.
Sure.
So, I mean, it's simply just connecting those same dots and it'd be game over, man. People
Yeah.
would be knocking on your door to say, you believe in what I believe in. Can we work together?
Yeah. Yeah. I agree. That's good. They're very good. Yeah.
Awesome, man. Awesome. Well,
Cool.
yeah, I mean, those are just right out the gate. But I mean, anything else? The advertising side of it. I did want to ask. You mentioned you guys are doing Facebook. Anything else other than Facebook, or what else are you doing? Is was going to be the
Well,
question too.
mostly Facebook. I am, we are calling on businesses as well,
Okay.
for the financial wellness space. But it's mostly Facebook that we're bringing clients in, and it's pretty inundating for us, right? I'm in appointments usually all day long. My agents that I do have are in appointments all day long, but
Mhm.
we're definitely, that's why I'm looking to build out the force
Yeah.
because, right, we can use more people because more people offering this will help more people, and of course, it can be filled up by all the people who are in debt, and we have trillions of people in debt, well, millions of people in debt, right? With trillions of dollars, right?
Sure, got you.
Yeah,
All right, fantastic. Well, I mean, Facebook, I think, is a safe place to play,
yeah.
especially in the U.S. For better or for worse. Everybody's on Facebook.
It's funny, that when we're talking about social media, I read an article the other day, and by the way, I put a press release out just a couple of days ago, and so first of all, on the social media side of it, through this article, I've been looking to see who's been reading the articles, and what the press release that I put out is also a page and a video that I created, and it talks about the differences between 401ks, IRAs, and IULs, and how they changed during the IRS codes, the change in the CARES Act 2020, and so on and so forth. And through this article, I was reading, or through this press release, I was reading an article that on TikTok, right, which is a social media site that,
Sure.
which mostly is in the Generation Z is going to. Generation Z don't really like 401ks. They're really into
Hmm. Interesting.
insurance, right? Really into the IULs. They think that 401ks are lackluster. Sometimes they think they're scams, and so they're looking and really open to having their own life insurance policy as the way to build wealth and
Hmm.
to
Yeah.
retire. Yeah,
All right, that's interesting. I wonder if that's also why we see so many of them not, jumping so quickly into the workforce as other generations as well.
yeah, that's right,
So
right.
that's an interesting trend.
Yeah, it is interesting. They're not looking for the match. That's what people will say a lot of times
Yeah.
when you're comparing a 401k to the IUL, and they're looking for the match contribution that they get from their companies. But as we all know, the 401k is subject to the ups and downs of the market, which IULs are not.
Fair enough. Ron, let me ask you this. I mean, between you, your team, are you guys out there doing workshops or events or anything like that? Like things where you are taking the opportunity to educate, that local community?
Absolutely, absolutely. So, I work with a lot of the African American chambers of commerce, and I
Nice.
speak in a lot of those. I speak all over the country. In fact, I have an avatar which is called the Debt Whisperer. My sister gave me that name a while ago, and however, I attend trade shows. I'm especially small business expos, so I'll be in Dallas in October. There we have a booth, and I'm also doing a workshop there as well.
Nice.
And then Atlanta in December, same thing, trade show. I'm doing a workshop there. I probably do maybe 4 to 6 workshops a year, at different events and different um, associations as well.
All right. Yeah, I asked that question, Ron, because again, I know there are a lot of groups out there, promoting that they are all about financial literacy for better or for worse. I can't judge the quality of them,
Sure.
but um, I'm a big advocate. The other side of not spending a lot of money on marketing or advertising is doing events or getting out and networking like you clearly are.
Yeah.
So, but I say all that, for any of our listeners, any of the folks kind of checking out our conversation right now. If you don't want to spend a ton of money marketing and advertising, doing exactly what Ron here is doing, getting out there, shaking the trees, shaking the hands, all of the above.
Yeah.
It's the only way to do it to get the spike for growth.
That's
So,
right. It definitely is. And it's funny that I meet a different kind of clientele when I go to these events and these kind of shows. And it's definitely the follow up, because you meet them at the events, you talk to them, you show them what's going on with what you're doing, and
mhm.
people are always interested in seeing how this works, what we do. But the follow up, and I've had great success at these different trade shows and events, and I've done them all over the country.
Yeah.
From Atlanta to you know New Orleans and Chicago, and on and on and
Mhm.
on. But definitely yes.
All right, good stuff. And then the the small business expos, that's the one that moves around nationally every
It
year.
does. That's right. Right. So I
Okay.
I
All
did
right,
that
I'm
one. I
familiar
did.
with it.
Yeah,
Yeah.
you are. Yeah, I did the one in Los Angeles. Not this year, but last year. This year, I'm in Atlanta. I did New Orleans as well. It's funny. One thing I've learned about these kind of events is and this is kind of different, but I had joined the Minority Development Council
Hmm.
nationally,
Yeah.
and they have an event I think coming up in October as well. And last year, I had written an article to participate, and they normally have a topic at these events. But what you find, and it's part of the reason why we decided to go the direction that we're in, is because of this. Even though they're a minority development council and they puts on these large events, they're normally sponsored by the banks,
Mhm.
right?
Yep.
So going there and talking about what we do at the banks becomes, in that case, kind of a little bit political, right? The banks don't want to hear us
Mhm.
talking about doing things a different way, and they not getting that interest that they're counting on. So that was part of the reason why we decided to go the direction we are and not advertise ourselves in that way or brand ourselves where we have a target on our back, from the
Yeah.
banks. I think that staying underground and kind of talking about it the way we do and directly with the clients is much better.
All right. So, with that same thought, again, I know the banks are big brother on this one. They're very powerful.
Yeah, they are.
Um, but my but for you on that is that when it comes to marketing, there's really only three ways to put your business out there in a very, very effective way. And that's to promote a lifestyle, a transformation, or a movement. And again, I mean, what you've established, Ron, it is a disruption.
Yes,
Disruptions by default, in my book at least, are movements.
it's a movement, no doubt.
So, so the one of the interesting ways I think to push your business forward is going to be to promote it as a disruption to the normal flow of banks, the normal flow of insurance. But of course, again, to your point, we got to do it and make sure it's not done in a way for folks to start stumping you out before you get your
Yeah,
momentum,
that's
or
right.
get more momentum. I mean, you're doing great with momentum, but continuing to build. But I do want to just highlight that I think your future success lies in the movement statements that I
Yeah.
know you can produce.
Yeah,
So
I agree. I agree. I think that in 2, 3, 4 years from now,
yeah,
everyone will start to look at becoming their own bank, having their own personal bank, and loaning themselves money rather than paying the banks. It's definitely a movement.
I love it. I love it.
Yeah.
I want to get behind that movement with you. Ron, great conversation. Let me start to wrap us up. I love to just ask if there are any key takeaways that you got from today's conversation, just worth considering, hopefully worth implementing so you can continue to move forward with
Yeah.
everything you're building in your
Well,
business.
definitely. I think that your idea of having a simple way of speaking to agents that we're recruiting to build out the team, I think that's going to be something that we are going to work on and definitely you know I guess project and maybe bring out and use as a way to build our team. Also the movement, right? And we've been talking about the movement itself, right? And because it is a movement, because people have been paying their debt and paying things and doing things a certain way all their lives. This is a disruption. Okay? They're thinking about their debt differently. They're thinking about their expenses differently.
Mhm.
One thing about the technology is it tells the truth. They get to see exactly where they are, right? And so definitely a movement, and I like that part of what you were talking about. Definitely.
All right, fantastic. Well, Ron, man, before I let you go, I would love if you could just share with us the best way that our audience can follow you or connect with you and just continue to learn more about this movement that you're going to be leading them through
Sure.
financially.
Sure. So definitely you can come to our website, which is www.financialliteracygroup.com, or I'm sorry, financialliteracy.group. So again, it's financialliteracy.group. You can meet us there. But we're on social media. So you can find us on Facebook. You can find us on TikTok. You can find us on Instagram. We're there. We market. We post a lot there. Our YouTube channel is very big, so you can watch some of the videos and definitely subscribe and see what we're doing. And a lot of the posts and the press releases that we're putting out. But if you go to the website and you see some of the pages and some of the information that we've written, you learn a lot by it. So education is going to be big.
All right, fantastic. Well, Ron, I greatly appreciate your time today, the opportunity to learn more about this amazing product and service that you're bringing to everyone here across the country. For everyone plugging in with our conversation today, thank you all for making us a part of your day. So until next time, this is Jarvis and Ron wishing you all more leads, more customers, and more profits in your businesses. Take care, everyone.
Okay. Thank you. Thank you, Jarvis. Talk to you soon.
Yes, sir.
All right.